Good afternoon. This is Brian Split with Allendale here for your closing commentary on Tuesday, November 9th, 2010. We did have a USDA report released this morning, and all in all, it was looked at initially as quite bullish, mainly on the soybean front, with a large reduction in the soybean ending stocks and quite a bit more than was anticipated by the trade. But at the end of the day, we had some mixed results. December corn actually finished down 9 cents today at 5.76 1/4. The December 11 contract down 3/4 of a penny at 5.52 1/4. On the soybeans, we did have January beans up 54 1/4 at settlement at 13.29. The November 11 contract was up 30 cents even at 12.44 3/4. And over on the wheat, we did have December nearby Chicago down 14.5 at 7.21 3/4. The July 11 new crop down 13 1/4 at 7.97 1/4. Now, as far as the report specifically for corn, it really can't be spun as too bullish. We did lower the yield and reduce the ending stocks, but I believe a lot of that was priced in based on what the expectations were ahead of the report. So the yield came in just 1/10 of a bushel below the average trade estimate, and ending stocks just a hair below the average estimate. So all in all, it does appear that a lot of this was priced in, and obviously by the way the market ended up today, looked at as a selling opportunity in the big picture here. On the soybean end, and one thing to note on the corn as well before we move to the soybeans is we did have record volume for the December, or not the December, but the corn contracts as a whole, so in aggregate, and we had a reversal on the day. So this nearby contract opened up above $6 and then closed below 5.80, which technically is a reversal, and especially on a record volume day. So we're going to want to pay attention to corn's movements here short term. If we end up seeing selling at the 20-day moving average late in the week, then that may pose a shift in the mentality, at least for the short term, based on today's move. On the soybeans, again, we did have a bullish report. The trade was really anticipating that we could see a small increase in the soybean yield, and instead we got a surprise of a half a bushel reduction. More so, the more important number was the reduction in the ending stocks from 265 million bushels on the October USDA report to 185 million bushels on this November report, while the trade was looking for a number in the 240 million bushel area. So again, this was very bullish compared to trade expectations. Definitely caught the market off guard, and we did open sharply higher, but these gains were limited by the lower trade late in the day by both corn and wheat. Wheat traded very similar to the corn and had a very similar report. Again, we did see some reduced ending stocks, but nothing that was really outside of the trade estimates. So again, a lot of these numbers may have been priced into the market, especially with the sharp rally that we've seen in wheat into the trade. Other than that, as far as some of the outside markets, we did have the meats trade with some interesting mixed trade today. The hogs had a little bit bearish information, as well as cattle in the report. We did have some production increases in some of the back-end numbers in this data. Other than that, the feeders did bottom about 10 minutes after the USDA report was released this morning, so that January contract ending up $1.80 higher. And it seemed like these feeder traders knew something from the get-go this morning, with that market again making steady highs throughout the session here. Other than that, December hogs finished down 60 cents, and you had the fats down 20 at the end of the day. In the outside markets, looks like the stock market is trading a little bit lower today, but off of the lows. We do have the Dow down about 30 points, S&P down 5, NASDAQ down 4. The dollar index is up 44 at this point. It is above its 20-day moving average, which has been a key moving average to watch. We've got a G20 meeting that's going to definitely give some move to the currency markets. And if anything poses a lot of risk for commodities in general, it's going to be some of the currency battles that we're seeing, and also some recent talk about ETFs and whether or not that may be the next bubble to burst in the markets here. So that'll be something definitely that you're going to want to keep your eyes on over the next couple of weeks. Other than that, we did have gold and silver make some new highs today before pairing those gains. Gold settled about $6.90 higher today, silver $1.47 higher. But as of this commentary, gold is actually down about $2, and silver is only up 47 cents, so about $1 off of the settlement price. A lot of volatility in these markets, and they're going to be very sensitive to these currency moves as well. Over to the softs, very good day in the softs. Had sugar up 123 points at settlement. Cotton up the 5-cent limit. We're above $1.50 on the nearby December contract. And we had December 11 cotton actually trading above $1 a pound as well. So for cotton producers, before this crop is even in the ground, we're over $1 a pound, which is very, very strong levels here. Coffee also up over 9 cents today. Very strong move there. And we are continuing to see some weather concerns in South America that is supportive to that market. But there's a lot going on in the markets. If you have any questions about the report or anything in general, please give us a call. Our number is 1-800-2-MARKET. That's 1-800-262-7538. You can also look at our website online at www.allendale-inc.com. And last but not least, again, want to mention our conference coming up in January. It's the 21st and 22nd, which is a Friday and Saturday. So go ahead and get reserved and get your seats saved early, as we are seeing some very strong demand for this conference, considering all the movement that we're seeing in commodities in general right now. So again, this is Brian with your closing commentary, and good luck trading the rest of the week. Thank you.